If you're not investing in crypto, are you even really investing?
Investing.
All right, we're back, baby. Back. Better than ever. I want to talk to you about a company that's trying to sell you a piece of itself. Gemini. It's like a spaceship.
Gemini.
It's the crypto exchange founded by the Winklevoss twins. You remember those guys, the Winklevoss twins? Ever see that movie? Social Network?
I'm Cameron Winklevoss, and this is my brother, Ty.
And you're here because either of you can answer.
Oh, I'm sorry, sir. I thought you were reading the letter.
I read the letter.
Well, after they got a hefty settlement from Mr. Zuckerberg and a healthy dose of public recognition, those twins, young strapping men that they are, they turned that tension into something even better. Something for the future. Don't you want a piece of the future? Bitcoin. You love Bitcoin? They weren't just going to buy Bitcoin with their settlement money. They were going to build it. It was going to be a trust-first exchange. That means putting your trust first. Do you think it worked out? A trust-first exchange. This is a place where Wall Street could get cozy with digital assets without getting scammed in a digital alleyway. You ever been scammed in a digital alleyway? It's not fun. Not fun or funny. For a while, it seemed to work. They got a license from New York's top financial regulator.
Do you swear or affirm to tell the truth, the whole truth, and nothing but the truth, so help you God?
Which was a big deal back then.
There is not currently a robust regulatory regime to help spot red flags and root out illegal activity. Right now, the regulation of virtual currency industry is still akin to a virtual Wild West. That lack of regulation, however, is simply not tenable for the long term, and I think it's already starting to change.
They even created their own digital dollar, a stable coin. They called it GUSD. G-U-S-D. They were the darlings of the crypto world, promising institutional grade security and that oh so important feeling, trust. They were so clean, you could eat off their balance sheet. As we all know, a party's not a party until someone spills their drink all over your very expensive carpeting. In that case, that carpeting was a program called Gemini Earn. This is the pitch. Lend us your crypto and we'll pay you interest. Pretty simple, right? Well, behind the scenes, Gemini was lending that money to a partner called Genesis. No, not that type of Genesis. Not that one either. Nope, not that one either. Neither. Well, what do you think happened? I'll give you 3 guesses. When the crypto market had its big oh no moment in 2022, Genesis and all that money, they disappeared in a puff of ganja smoke. This left over 340,000 customers.
Hi. Yeah, man. Hi.
Not that type of high. High and dry, holding a bag full of promises and an empty wallet. Now you might be thinking, well, didn't they know the risks? The New York Attorney General claims Gemini knew exactly what was happening. Their own internal risk reports allegedly show Genesis books were risky, and at one point compared them to a sinking ship. Like Lehman Brothers before it went down. And guess what? Gemini's own risk personnel supposedly pulled their money out of the program before it all collapsed. Allegedly. Supposedly. Don't sue me. I'm just reporting what I heard. So, the result? Multi-billion-dollar lawsuits, baby! And a lot of very unhappy customers. So what does a company do when it's drowning in legal fees and looking at a net loss of over $282 million in the first half of the year? It files for an IPO.
Crypto exchange Gemini filed for an IPO last week and would become the third publicly traded crypto exchange, joining Coinbase and Bullish just in recent months.
That's right, you got it. This isn't a celebrity IPO to fund a new space program or a fleet of self-driving cars. This is an IPO to repay debt. It's less of a victory lap and more of a corporate bake sale. Get out of the red. As a side note, they're also planning to move a chunk of their operations from New York to Florida. Should I invest in Gemini? Well, I'm not going to tell you what to do, but here's what you need to know. On one hand, the company's built by pioneers. Pioneers in the crypto space. On the other hand, the company is currently unprofitable, has over $2 billion in liabilities, and is facing multiple lawsuits from top financial regulators. They were funded on the idea of trust, but that trust was severely tested, and for some, it was broken. Broken like me. Deeply broken man. Ultimately, the decision is yours. Just remember, a company with a shaky foundation might not be the house you want to build your financial future on. And on that note, smash that like button, hit subscribe, and stick around for more content where I dive deep into why I think a CD is still the most exciting thing in finance.